While sentiment on Wall Street is still highly cautious, investors seem to be slightly warming up to stocks, according to an Investopedia survey. Here to talk about the year in review and what to expect for next year is Investopedia's editor-in-chief, Caleb Silver. Caleb, good to see you in the flesh here at Yahoo Finance HQ. Loved your terms. One that stuck to me is cold storage. I guess no surprise given everything that has happened in crypto.
Yeah, cold storage was one of the top 10 search terms of the year in terms of traffic outside of its normal range. And why did that happen? Bankruptcies at FTX, bankruptcy at Celsius, people wondering where their Bitcoin is or where their tokens are. If they didn't have them in cold storage or in a cold wallet, some of them may have lost it forever. So everyone was looking that up right as these cryptocurrency exchanges were collapsing.
So what's the prediction for next year? What do you believe people should be placing their attention on as we get into 2023?
Well, we know folks are going to be focusing on the terminal rate. What's the terminal rate? That's the end rate at which the Federal Reserve may stop raising rates. People have been very fixated on our central bank this year for good reason. So the terminal rate, that looks now north of 5%. Is that going to be right for 2023? We will see. But that's a big one. Also, folks are going to be looking at the wash sale rule. If you sold some of those stocks at losses this year and you want them buy them back a little bit cheaper, you can't do that and take the tax deduction. The wash sale rule, very popular at the end of the year here in 2022. We think it's going to be popular in 2023 as well.
That's a good one to look up. What about recession? We've been talking about recession, I think, since January of this year. Are people still searching for that as much as they were 6 months ago?
Absolutely. And recession is the number one concern among our readers in terms of what they're worried about for 2023. They got a little bit warmer to stocks towards the end of the year with a little rally in November. December didn't do much for that. But people have been worrying about a recession. But as you guys know, recessions, it's a big economic term. There are indicators, but it's also very personal. So for a lot of folks, they feel like they've been in a recession since 2020, since the onset of the pandemic, especially small businesses and lower income folks. We know that's going to be popular in 2023.
Okay, and so we have essentially seen many different variations of bear markets in the past, but this one much different because we're coming out of a pandemic. You've got global uncertainty continuing to move forward, even as we were talking about a pact between Russia and China that continues to emerge. So with the reality of what we could see on a continued basis in the bear markets of our time, and given the confluence of factors that we have right now, where is that stacking up among some of your readers as well?
Yeah, they're worried about it. At the same time, they want to be opportunistic. For a lot of younger investors who came into the market in the last couple of years, or even over the past decade, they've never seen a dynamic like this. Rising interest rates, sticky high inflation. Used to be able to throw a dart at the dartboard, hit any growth stock and make some money on it. You can't do that anymore. You got to be smarter. You got to focus on fundamentals. Boring guys is back. You're getting some yield out of the bank right now. You're getting yield in money markets, value stocks. It's the tortoise versus the hare in 2023. We know a lot of folks are going to be thinking about that portfolio migration to the slower moving, more steady fundamental stocks.
Do you think investors just learned something this year? Like, what did they learn this year, Caleb? They've been battered on tech stocks that only in the past have gone up. I mean, what are some of the top takeaways for investors this year?
Yeah, I think a lot of it is people are figuring out what their sleep factor is. What is the losses they're comfortable with holding on to before they capitulate? So a lot of folks have had to think, do I sell into a downturn? Do I sell into a bear market? A lot of our portfolios, a lot of folks were invested in growth. Do I sell out of this now and transition? So they were learning about what to do next and how to position themselves. But there's always some opportunistic investors looking for yield, especially when everyone gets scared. A lot of people get very greedy, so we're going to be watching for that.
Yeah, you would imagine it would be very helpful for them to have more financial literacy knowledge early on in their career. They have a lot of stuff coming at them. What are you working at? Investopedia.
Amen to that. We believe in financial literacy at every age, but we're trying to push it younger and younger. So we're working with public schools across the country to try to develop curriculum to really help people not just invest, but understand money writ large. We don't learn that stuff at all pretty much in high school. Now it's required in 26 states, but we really don't learn the basics. Guess what happens? We go to college, we get the credit card offer. Some of us graduate with student debt, about $35,000 on average. The first job's not going to help you pay that down. So we need to teach people the fundamentals at an early age so that they're ready for their money lives, because it's a long journey, as you know.
Yeah.
Investopedia editor-in-chief Caleb Silver, always a pleasure to see you and great getting some of the insights from the platform. I know you're a skateboarder, so we've got a couple 50-degree days coming up here in New York City. We're going to get another check-in from the skate park out there, too.
Roll on.